is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 24th, the fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. However, today, it's just past 8 o'clock in the morning. So if you are listening live, I would love to hear from you at 877-927-6648. If you have a question, and again, it's between 8 and 9 in the morning, you can always send me an email. For that, send that off to Steve at TFNN.com. And if you'd be kind enough to put radio show question inside that subject heading. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So we open up our morning with a sea of red with regard to equity futures. You have the S&P down 41 points. The NASDAQ is off 98. The Dow's down 366. And the Russell's down 26. Leading the charge on the way down, it's the Russell off 1.5%. Over in Asia last night, we had a sea of red out there. The biggest move to the downside, well, so far it's really the DAX off 2.5% right now. That's about 394 points. The FTSE's off 2%, 147 points. We're going to go check in on those charts here momentarily. Gold's up a buck. Silver's up 12 cents. You've got light sweet crude trading out at 67.53. That's back $2.40. Natural gas up 6 pennies this morning. The 30-year Treasury's up 1.5 points, trading out at 133.09. You've got the U.S. dollar index up 67 pennies. I do have a 10-minute delay on that, so it's going to be slightly different. If you got a live feed, it's trading out at 102.88, and it's targeting 103.39. So let's go take a look at what is going on internationally. Just really kind of take you through. I don't have any questions at this stage here. However, how about those basketball games last night? I thought 3 of the 4 were just amazing. The Kansas-Michigan State game, that was a great game. How about our FAU Owls, just down the street here, about 15 minutes down the street from it, beating Tennessee? I didn't see that one coming. And then Gonzaga blowing apart UCLA in that second half last night. So good games, though. So looking forward to the next games. I think there's some games tonight, right? Yeah. But anyways, let's go take a look at what's going on chart-wise with regard to the international markets and a few other things out here. So just kind of take you through what I take subscribers through each and every morning. We begin by taking a look at what went on internationally. So, it's one thing to say that the Asian markets closed lower last night, but what are they really doing out here? We take a look at the Shanghai. That's the upper left-hand chart. What you'll see is a Rhodes Momentum Indicator topping pattern out here. And right now, just kind of a sideways-ish move. Over the last couple of days, price has been oscillating back and forth of that oscillator and change line. So we don't have a real clear signal here. Does price want to go target 33.05 or does it want to target 35.04? I don't know the answer to that. So we just kind of leave that off to the side as neutral. We have in the Hang Seng, though, even though the Hang Seng was off, 133 points, about 0.7%, it still has a TD9 count bottom. And price above that oscillator and change line. So the Hang Seng wants to go target, or it's telling us right now, we'd like to go target that 21,005 area. In the case of the Nikkei 225, it's a possibility that's trying to set up an A to B equals CD to the downside with a price target of 26,211 out there. Right now, from a rally standpoint, though, it looks like price wants to try to get up to that oscillator and change line and test that level. That's at 27,255. If we take a look at the FTSE right now, the FTSE formed a nice TD9 count bottom. It did that on the trading session it formed the pattern on the 20th. It completed the pattern on the next trading session. And now price is back inside that swing point. So the only way that this bottom pattern here gets negated is it closed below bar number 9. That low in the FTSE is at 72.0682. But if price closes inside that swing point, that means it closes below 74.2624 out here. We might see a test of that swing low, or maybe if it gets taken out, there's a possibility that this could be setting up an A to B equals CD to the downside. But the only way that comes to fruition, and then that would get us back to the October lows, and I can show you what that could look like. This is not what I'm saying it does look like, but here's what it most certainly could look like. There's the A to B. And if the C point was just simply that retracement up into the oscillator and change line, a key area of resistance out there, well, then we can go ahead and put this up here, and you can see we get back. Well, let me smush the chart a little bit. Technical term there, that smushing, and you can see we would get all the way back into that October 2022 low. So that TD9 count bottom is really important out here. Things with regard to the FTSE are bearish because it has a falling price oscillator below zero. If we take a look at the DAX, we really have a similar kind of a pattern out here. When I say similar kind of a pattern, it formed it didn't form anything. So I don't have any kind of a bottom pattern out here. What we do have, though, is the rally, the counter trend move, certainly moved up into that oscillator and change line and found resistance. So this, too, if it takes out the low from the trading session of March 20th, that is at 14,458.39, that would go ahead and set up an A to B equals CD to the downside. Again, we don't have that pattern right now. What we have is price trading into a swing point that had identified lows before. If we take a look at what's going on in the ES Mini, it completed an A to B equals CD to the upside. And right now what we really have is just simply price consolidating with inside its profile. If we take a look at it, there was a breakout, but it was just a one-day breakout. It was a one-hit wonder. When I say breakout, I'm referring to trading above or closing above the top of its profile. The top of its profile is where you have sellers or resistance out there. So it hasn't been able to do that. All we have right now is just a consolidation with inside its market profile with support at 38.67, resistance 4.007. Inside the NQ, this did form a Rhodes Momentum Indicator top. It did that 2 days ago, and it formed a nice bearish dark cloud cover candle. However, price remains above that green oscillator and change line and the top of its profile, and therefore its overall conditions inside the NQ are what we will call neutral. If we take a look at the U.S. dollar index, the U.S. dollar index completed a Gartley buy pattern, or at least a buy the D point pattern out there. It did that yesterday when it formed that bullish hammer candle. We're having follow through today. We expect and anticipate that the U.S. dollar index will go target that oscillator and change line. That's up in the 103.34 level out there. So let's continue taking a look at that U.S. dollar index. Let's close out these charts out here. Quickly move over to the U.S. dollar index out here. Give me a second. We'll take a look at, let's just take a look at the overall currency. So the euro here, the euro is testing a key level of support. That's that green oscillator and change line. No topping pattern, but a price closing below that level, and that level as we speak right now is 1.073. That's going to go ahead and put some strength into the U.S. dollar index. But right now, it's sitting on support. The Japanese yen is trying to get stronger. It's going to get stronger. Well, it likely will get stronger if today closes below the bottom of its TD9 count pattern, and that was the low from yesterday, and right now we're trading below it. Watch 130.32. You close below that, that's going to continue to weaken and go back and target the February lows out there. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we got the S&P futures off 37, Nasdaq's down 82, Dow's off 360, the Russell's off 2450. We've got one question. Let's get to that, and I would love more questions out there. So feel free to give us a call at 877-927-6648. Steve at TFNN.com if you want to send an email. Of course, any ping inside that Tiger's Den will do. So let's go take a look at the SMHs for Dano inside the Tiger's Den. And Dan's question is, can you take a look at the SMHs? Is this going to continue to prop up the NQs out there? Well, first, with regard to propping up the NQs, I'm not sure if the SMHs, if it needs the help of the SMH. Let's go find out. Let's take a look at this dashboard with regard to, so here's the S&P 500. And what I'm looking at here, Dano, is the upper right-hand corner. It's very similar to yesterday, the day before out there. If we take a look at this is bearish TAS market breadth, meaning for these time frames, more instruments are trading below profile than above profile, below support than above resistance. Now, that's the S&P 500. Let's see where the NASDAQ is right now. You are bullish, still bullish for the daily, still bullish for the weekly out here. It's those intraday charts. So here's where we're getting this chop this week. It's really been kind of a decent range out there, but it has been a chop. So with regard to market breadth, the NASDAQ doesn't need any help. On a daily basis right now, there's 30 instruments trading above profile, 24 below. And on the weekly time frame, we have 28 above, 22 below. Now, obviously, that could change during the day out here, but right now, as we speak, at 8:19 in the morning, it has positive market breadth. As far as the SMHs, let's see where they're trading at in the pre-market out here. So I've got the SMH last trade fired off at 255.74. And it's still above the top of this consolidation pattern that we had drawn in here. Price is above the top of its profile. That 255 price is above its green oscillator and change line. So conditions are bullish out here. Now, whoa, Stevie. Okay, take that back. I see this bearish shooting star candle that formed 2 days ago. So the SMHs, Dano, do have a Rhodes Momentum Indicator top. However, the overall signal still remains neutral. The reason why it remains neutral is because price is above that green oscillator and change line, again, telling us we have a rising price oscillator above zero, absolutely a bullish condition out there, and price is above resistance, meaning the top of its daily profile, which is down at 243.27, and it's above this little consolidation pattern. So overall, it's neutral. If price were to close below 252.02 today, that would be signaling to us, Dano, that price wants to pull back and test another level of support, and that would be that 243.27 area. On a weekly time frame, if price closed above 255.64, it's giving us a signal of a breakout, because that would be a close above the top of its profile. On a monthly basis, this is looking very good. We're already trading above last month's high out there. We're trading above the green oscillator and change line. So at this stage of the game, it looks like it does want to move higher out there. However, it's going to open up lower, 255 and change, it appears. If we take a look at what that will do for us, shoot, that's not even below the low from yesterday at 254.62. But it could do that in a heartbeat. That could then set up an A to B equals CD to the downside with the price targets of 251.32, 249.36. So even on the short-term time frame chart out here, Dan, what we don't have is any kind of break of a key level of support, that first one being that 251.32 area out there. So what are the SMHs going to do today? They may just simply take their trigger from the NQs out there. So I hope that answered your question, Dano, and thank you very much for it. More Steve-O, could you take a look at Baidu? Absolutely. So that's for Bill. So let's go take a look at Baidu. Let's throw those charts up on the screen. And just give me a minute. So if we take a look at Baidu, closed out yesterday at 150.91. Give me a second here. Multitasking, probably shouldn't be doing that. So now back to Baidu. So what we have with Baidu is it is trading above the top of its daily profile and above its green oscillator and change line out there. So let's go see where this is trading in the pre-market, and that is BIDU. Last trade here firing off at 153.90. So it's actually trading almost into yesterday's high. The actual high for yesterday was what, 154 something, 154.28. So Baidu is strong. It is it was targeting its swing point high from February 27th. That had volume of 14 million shares, and the first time up into it, it did volume of only 5.9 million shares. So it's that's a real, looks like to me like it's really consolidated now between that high and its breakout level at the 131.01 area. A close below 131.01 would be bad news for it. On a weekly time frame, you are consolidating with inside its profiles. No reason for it to not get up to 160.88. 156.77 on a monthly basis is your resistance point, the top of its profile. So overall, this looks pretty good. On a short-term standpoint, if we take a look at Baidu as it closed out the session yesterday, just really been trading sideways here since about 10:30 in the morning, back on the 20th, today being the 24th. So maybe we just continue this sideways choppy action. But overall, the daily, weekly, and monthly with regard to Baidu, Phil, look pretty good to me. How do they look to you? You seen the same thing out there? So that was for Phil inside the Tiger's Den out there. New rally. GE. What future contract is that? Mr. Z, my apology. So while I'm trying to figure that out here, it's the Euro futures. Okay. So how am I going to pull that up? Let me work on that during the break for you, Mr. Z. I'll try to pull that up for you, and that way I don't have to be fumbling around here. So I'll put that on my to-do list, and we'll certainly get back to that in a few. But what we can do now is let's go take a look at the NQ out here. So let's go up and take a look at those charts, see what it's doing on an intraday basis out here. We know what it's doing. No, that's the Russell. Let's take a look at the Russell. So let's just stick here. So we take a look at the Russell 2000 as a TD9 count bottom pattern. That formed out here on March the 20th. If today price closes below 1708, it negates that signal and tells us about lower price. Right now, two levels of support are being tested. It's that candle session, the TD9 count bottom, as well as its profile at 1722.70. We can see on the 5-hour time frame chart, it is going to complete a TD9 count bottom pattern in the next 35 minutes. And that's right at its breakout level of support of 1708. So on a larger time frame, we've got a nice bottoming pattern. What should occur is we should see price try again for its oscillator and change line at about the 1738 area out there. So you've got that now. Whatever the low is of the session for the Russell 2000 this morning, right now it's at 1705.30. If price closes below 1705.30, that happened, then it's going to negate that signal and tell us about much lower price to come. But with regard to the Russell, on a 30-minute basis, you can see you've got a nice TD9 count bottom that is forming right now. In order for this to form, price just simply is going to need to close this session out, and that means by 8:30, 4 minutes from now. Well, it's not going to have a problem doing that. So you're going to get a TD9 count bottom pattern inside of the 30-minute time frame chart. The 60-minute time frame chart, which does not end until 9 a.m., could form a Rhodes Momentum Indicator bottom, which is what you've got on the 15-minute chart, and it looks like on the 10-minute chart right now. So we know about the Russell 2000, the weekend to see out here. It's back at support level, testing it. On a 5-hour time frame chart, it's going to have a nice bottoming pattern, and on the shorter-term intraday charts, we see signs of a bottom. So maybe we've seen the low, at least for the morning. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. You got the Dow Equity Futures. They're down about 328. S&P, ES&P off 33. NASDAQ 69. Russell 21. Gold up $4. Silver up 32 cents. We're going to go take a look at Euro-Dollar Futures. This is for John inside the Tiger's Den. So if we take a look at the chart here, John, price is breaking out. It's trading above all kinds of highs on a daily time frame. It's trading above profile levels. So you're asking for resistance. On a daily time frame, you've got none. On a weekly time frame, you've got none. It's the monthly time frame where you have your profile resistance areas. And so it's trading into a bearish structured monthly profile. It hasn't gotten there just yet. The range, that bearish structured range, is between 96.66 and 97.30. 36 out there. You could almost make the case that there's an A to B. You can't almost. You can make the case that there's an A to B equals CD to the upside pattern out here, John. And it would look like this. The A point, easy to identify. That's the low on a daily basis from March the 8th. The B point up here is going to be the high from, let's see, yep, it's going to be the high from the trading day of March the 20th. And then a retracement into a low from 2 days ago, March the 22nd. That was a 42% retracement. So your one-to-one price projection level inside Euro-dollar futures, John, would get you up to that 97.55. So what we know here is that even though you've got that pattern that is in play, your areas of resistance, what you were looking for then, the only ones that I've got at this moment are going to be at that 96.61 and a 97.36 out there. So I hope that helps you out with the information that you needed. If not, please write back and we'll be happy to get that for you. Let me just check the phone lines out here, see if there are any requests by email. Don't want, yep, there are. There is, so let's go to those. I don't want to miss out on anything. The first one, I believe it was for Google. So let me get this typed up in here, GOOG, and let's get to the actual question. It's coming in from, there you go, from Hector and Patty. And Hector writes, happy early bird Friday. It is Google, OUL, resistance and support, weekly basis. Have a great weekend. You too, Hector and Patty. So with regard to the weekly time frame for Google, your resistance area is 108.82, the top of its profile. Bottom of that weekly profile, down at 87.90. Oscillator and change line is at 93.14. On a daily time frame, Google is bullish. Now, I say it's bullish, and then I really don't have a top out there. There's not an A to B equals CD pattern. This retracement, this pullback on March the 13th was too much of a retracement for this A to B leg for this to qualify as an A to B equals CD pattern. You did get that bearish shooting star candle on the daily time frame. So what that does do is that does give you a resistance level on the daily time frame, Hector, and that's going to be that shooting star high at 107.51. So 107.51 is another resistance area. Support to the downside, 100.22. Where is Google trading in the pre-market? So 100.22, it's 105.44, so it's still well above that support level out there. So that's what I see when I take a look at Google. Hector and Patty, you have a wonderful weekend. I hope that helps you out. If not, write back, and I'll make sure that I get you some additional information. Still showing the GE chart. Son of a gun. Sorry about that. So give me a second here, folks. So that basically says everything I just said. People were looking cross-eyed, saying, what are you talking about, Steve-O? Here's what I'm talking about. Here's Google. So you can see on a daily time frame, price above the top of its profile, above the green oscillator and change line. So that green oscillator and change line becomes a support area, 100.22. The resistance, because we don't have a completed pattern out here, I don't have any profiles, don't have a TD9 count breakdown area, at least not in clear sight, the shooting star becomes the resistance point. And that's at its high, and that's at 107.51. With regard to the weekly, you can see 108.82 as its next resistance to the upside. And on the monthly time frame, 107.69 to 112.77 out there. So sorry about that blabbering and not actually showing you guys the charts. But, hey, we have rectified that. The next question, let's see here. We've got a question that is coming in from Alton. And Alton wants to take a look at AEM. So let's go take a look at Agnico Eagle, AEM in the pre-market here. Let's go see where that is trading out at. That is at 51.49, closed yesterday at 51.13. So the question is, I'm looking for an entry point on AEM. Thank you and have a great weekend. I think you need to be patient here because AEM is going to complete a TD9 count topping pattern today. And so if that does take hold, and even if it makes a higher high, it's still going to complete that pattern today. So what should take place, it's not a guarantee, Alton, but what should take place after that high is we should see price pull back to support. Now, with regard to support levels, the first one is at 49.77. That may or may not be an entry area, but it's one place to consider. The oscillator and change line and the center of its profile is down around 48.23 to 48.46. That would be another area. And then obviously 46.50, the bottom of the profile for AEM, would become a price target. So the reason that we want to take a look at this, Alton, is, and if you didn't catch the opening of the show, or maybe that first segment, the U.S. dollar index formed a nice buy the D point pattern yesterday. And that says that we should see a further rally inside of the U.S. dollar index. So I will change charts here, go over to that black background screen, And what we'll do is we will take a look at the correlation tool that Stevie has. So the correlation between the U.S. dollar and gold. Right now, I've got the ES Mini and the U.S. dollar. And the bottom portion of this tab here is the correlation tool. When bars are below zero, tells you about an inverse correlation. When they're above zero, tells you about a directional correlation. Both will be moving in the same direction at the same time. Now, ordinarily, you see here, we've had pretty much of an inverse relationship in the ES. I know I said I'm going to talk about gold, and so I am. Just give me a moment. But here's the issue with regard to saying, a stronger dollar or a weaker dollar is going to have a certain impact with regard to, the ES Mini or the S&P 500. And it's because if we take a look at recently, now it's a 5-day setting, I would say we have lost that typical correlation as we speak. That's with regard to the ES Mini. When we take a look at gold here, if you give me a moment, we'll go ahead and edit this chart. We'll change out the symbol from the ES to Goldilocks, and this will give us the same 5-day correlation of price out here. So GC, so this should populate here momentarily. And now at the bottom of the screen, you're going to see, again, that directional correlation, which has predominantly, this again, 5-day period, has predominantly been intact, that inverse relationship. So knowing that the U.S. dollar index has formed that nice bottoming pattern out here, that we should see price continue to move higher. And so when we took a look at that AEM chart out there for Alton, forming a TD9 top or completing a TD9 top, and knowing that there's this inverse relationship that is still pretty much in place here with regard to Goldilocks. The reason I say pretty much is the issues with regard to what's going on inside the banking marketplace or the debt marketplace, the sovereign debt marketplace out there, that could just simply ignore these chart patterns altogether and say, I'm moving there because I just have a lot of lack of faith in the governments, U.S. and others out there. So that's the caveat. But technically speaking, this is saying we should see some kind of a top out here. We should see gold pull back, and then we should see the GDX pull back and its instruments as well. So I think you need to be patient out there, Alton. I do hope that helps you out. And again, of course, if not, right back. I see you wrote that. I got that message twice from you. Hey, no problem out there. All right, so inside the Tiger's Den, I don't see anything at this stage of the game. We've just got about 20 seconds. Let's see what's going on. What have we not covered out there? We really didn't cover Goldilocks, so we did talk about the pullback. So let me do this here. Let me get gold trades fired up. GC, we're still in April, so let's get those fired up here. Let's see what's going on the intraday time period as well. So on the daily time frame, no topping pattern. It had the opportunity to do that on yesterday, but it did not. So we got no topping signal. So with regard to price pulling back out here for gold, should it pull back, we're looking at 1945.60 to 1959.40 as a price target area out here. You do have a TD9 count top on the 240-minute chart, same on the 120. So yeah, you could be seeing gold getting ready to pull back. Steve Rhodes with TFNN. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So at the moment, we've got U.S. equity futures trading on the downside. Dow off about 330 points. That's about 1%, 1 3/10 for the Russell, which is 23 points. About 6/10 for the NASDAQ. That's 78 points, and the ES-Mini down 36. We're taking a look at AI. This is for S&P inside the Tiger's Den. So S&P, the very first pattern that sticks out to me, probably you as well, is that sideways consolidation. And so pretty solid bottom. That solid bottom is in the range of about, well, the support on the bottom out here is really at the 2016 area. So we have it a daily time frame. Is yesterday price closed above both the top of its profile and its green oscillator and change line. In the pre-market right now, S&P, you've got AI trading out, last trade fired off at 24.60. So we're still above the top of that profile. We're still above the oscillator and change line. So this is telling me, this is telling us, S&P, that price should go target the top of this consolidation pattern. The top of the consolidation pattern is somewhere right around the 29.98 level. Let's just call that $30. Makes it a little bit easier. Or we could call it 28.84 because we move over, we take a look at that weekly time frame chart. You have a Rhodes Momentum Indicator top with price consolidating with inside its profile. But it's really consolidating with inside the center of its bullish structured profile and the top. So that trading range out there is between 20.54 and 28.84 out there. The monthly chart. So if you are long this, I would stay long. You've got a nice Rhodes Momentum Indicator pattern on the monthly time frame. You are stuck in this consolidation. See what happens as you move to the upside out there. The consolidation can last longer. Watch volume. As price is, assuming that it continues to move higher, you'd like to see this moving higher as it approaches that swing point from March the 6th. You'd like to see that taking place with more than 50 million shares. As an example, yesterday with price moving higher, it was only 20 million shares. So if it doesn't move higher with the volume, it can still move higher, but we just simply have that consolidation pattern that is out there. Steve, is the oscillator unchanged line your proprietary indicator? No, not really. It's known out there. Nobody uses it. Do other trading platforms have it? No. So from that standpoint, it absolutely is my proprietary indicator out there. I have never seen it discussed. I have never seen it on a charting package. But I haven't looked at every charting package out there, Phil. So, yes. But I do a workshop that teaches you exactly how to use it, especially if you're a programmer. You can get it that way. Let's go out to Brent in Martinez, California. Hey, Brent, how are you doing this morning?
Well, I'm doing well, Steve. How are you?
Excellent. Thank you so much for joining us early in the morning. Folks, if you don't know Brent, he is in California, where it is 5:45 a.m. So we can say that Brent is an early riser, which I love. Me too. Me too. So GGB, I'm not familiar. What is GGB? What are you doing with it? How can I help you?
I think we've looked at this in the past, but it's been quite a while ago, and it kind of came back up on my watch list. I'm still thinking lower price.
Yes.
And I'm basing that on a couple of things that I can go over with you, but it's a steel company, and it's actually out of Brazil. So I'm just looking on the weekly. I see, higher highs and higher lows, but if I connect those bottoms, it projects out to something around 375.
Okay.
And I do see it looks like an AB equals CD on that chart.
You do.
And then if I go to the daily, I don't do a lot of the head and shoulder pattern, but that looks like there's a pretty defined pattern there with the center point in January.
Yes.
And the time and price would probably the same type of area down there, about 375. There's a gap down there back in October. So that's what I'm looking to see if it doesn't play out. And was just hoping that you could take a look and if you have anything else that you notice.
So the only thing that I notice here on the daily time frame is it has entered wave number 7, letter G. So a very small a small portion of the Chapman wave tools out there. So that's the only potential bottom. Of course, it needs a higher low. And if we do get that, it at least says we could get should get a counter trend move up into resistance. So this is trading below the daily profile. It has been for 2 consecutive days out there, which is at 477. It's trading below its red oscillator and change line, which is at 481. But you do have a Rhodes momentum indicator signal that has been triggered. So as an example, if this were to generate a bullish reversal candle today, that's GGB, folks, that we're taking a look at, it would confirm a Rhodes momentum indicator bottom. Now it's trading in the pre-market at 453, so we don't have that kind of a signal. So if we go back to the idea that this wants lower price, and I would say it wants lower price until it generates a bullish reversal candle, so long as this Rhodes momentum indicator signal still is in place out here. If we look at that weekly time frame, that's where we see that A to B equals CD to the downside. That is going to require another bullish reversal candle as well out there. So when we take a look at GGB, what I'll do here is I think I'll switch over to the black background charts. I'll do that momentarily, just to give us some other price projections. So let's see if it ties out, Brent, to some of the areas that you're looking at. But it's pretty much gotten to the 1-to-1 level. Looks like maybe 447 or so would have been the exact number. We'll find that out momentarily. At 447, though, there's also support, and that is the bottom of its monthly profile. So knowing that we're back at support, we pay attention to the daily and the weekly. Those would be its intraday chart, so to speak, looking for some type of bottom signals. And we have bottom pattern, but what we don't have is the signal with regard to those bullish reversal candles. Brett, before I move over to the weekly charts, I know you get to see these. Is there any questions that you have about these charts?
No, that was great. I appreciate it. Yeah.
Okay, so let's go take a look at the A to B equals CD price projection levels out here. And we'll just stick with the weekly time frame so we get something accurate. I'll just simply expand this out. So we take a look at the weekly A to B equals CD pattern. Actually, there's a couple of them. And so I'll put the large one in, Brent, and that's starting all the way back in May of 2021. So that would be our A point. The B point that we have to use here is the low that formed on July 4th. Now, the reason that we have to use that as a low versus the one back here on November the 8th is because we have a higher high. Because if I use that one, I would have to use the high from the week of February 4th. But we see a higher high that took place afterwards. So now I have to redo that A to B equals CD pattern. This is the larger one that is out here. So now we have a 1-to-1 price projection level, gets us down to the 317 area. Now, I don't have the daily chart here handy. Where was that gap that you were shooting for, Brent?
I had it back in October of 2022.
October 2022. So there's so many gaps out here.
It might have been at the end of September, but I do have, it looks like it's right around
I see it.
the end of September.
Yep, I see it. So Brent just talked about September 30th, between September 30th and then the next session, October 3rd out there. That's the gap. And now it's not like there's any kind of big volume or anything there, but certainly, on the daily time frame, since I'm here right now, let's just stay on the daily time frame, and it's A to B equals CD pattern. Let's see what this is. So with inside the larger A to B equals CD, there's a smaller one, or it appears to be a smaller one. It looks like the low. I just want to do this right, 511. 510, 510. So we use 510, And that retracement, was it a 0.382? Oh, geez Louise. Sorry about that. Screwed that up. Let's try that A point again. Let's mark that. And let's get to the B point out here. Let's add the C point in there. And so the 1-to-1 price projection level, that's 32% retracement. That's close enough. Gets us to 426, 1-to-1 0.272, 393 out there. I would say more likely than not, Brent, this should do more than a 1-to-1 A to B equals CD to the downside because of that narrow retracement that it had. So this could really take us all the way back into the lows of July of 2006. Get below that October. Hang on. We'll come back to you. That's Brent in Martinez, California. Folks, we'll be back in just a few moments.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So we're taking a look at ticker symbol GGB. It's Gerdu. It's with Brent in Martinez, California. Brent, I think the pattern that is in play that we want to keep our eye on is really the daily confirmed A to B equals CD to the downside. Again, that price projection at 426. Now, it's in a pretty decent area of support, which is the bottom of its daily profile at 454. And you can see on the weekly or the monthly chart, its price is moving into a rising price a trend line out there. So there could be some support as opposed to the larger weekly that gets us down to 317. I mean, it's got to take out that B point in order to do that. So I think it's a daily one that we pay attention to. And as it moves down, should it move down towards that 426 level, we just have to keep an eye out for a bullish reversal candle to confirm that pattern. I don't see anything else. But do you have any questions? Anything else that I can produce for you with regard to?
No, that's it, Steve. I'm just going to be patient, and it is interesting to. We're in a zone that could be support, so I'll be watching that, and I'm just going to continue to be patient and see how it all plays out. So Thank you so much, as always, for your help. It's much appreciated.
Thanks, Brent. I appreciate it.
Have a wonderful weekend. I hope you got that email I sent back to you. But
I did.
Thanks so much for everything.
You bet. You bet. That was Brent in Martinez, California. Looks like we're going to finish out the show taking a look at BNS. BNS is the Bank of Nova Scotia. So what's the Bank of Nova Scotia doing? Well, right now in the pre-market, the last trade here fired off at about $47.80. So you've got a consolidation inside of its profile. Who's that? Mark from down east. So you've just got a consolidation right now between 46.94 and 49.24. It's clear as a blue sky day out there. If we look at the monthly time frame chart, the weekly time frame chart, price is pulling into a TD9 count bottom. It's traded inside that swing point. That swing point has volume of 8.4 million shares. Last week when it got down here, it was with 14 million shares. So this needs a rejection of that swing point, which means a close above 48.40. If you don't get that, last trade fired off at 47.80, but if you get it close above 48.40, you can get a rejection of price on lighter volume. Otherwise, you're going to go test that low. And that low just says, hey, you stay inside this consolidation pattern on the daily time frame. Folks, thanks so much for all your support this week. We're going to end the show the way we're going to end every show. Sell when you can, not when you have to, in honor of our man, David White. Have a fantastic weekend, folks. We'll see you on Monday.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.